And let me start with number one, talking about investing your money in value companies. The way you invest in value companies is by investing your money in the stock market, and now you can look at investing in individual companies, or you can invest in ETFs. A couple examples of this would be investing in the S&P 500 ETF, something like VOO, or something like SPY, SPY. I personally invest my own money into VOO. You can pick whatever one you want, and of course, I'm not telling you what to invest in. Make sure you do your own due diligence because I'm just a random guy on YouTube. But what I'm talking about here is investing your money into the value companies, which are the bigger, more foundational companies, the companies that have bigger profits, that have been around for a long time, because these are the companies. If we go into a severe economic recession or even a depression, these are the companies that are more likely to survive because they've been around a long time, they have more cash, they have access to more capital, and so hopefully they will be able to survive a bigger downturn. The reason why I mentioned the S&P 500 ETF, because that is an index, a group of the 500 biggest companies on the stock market. So if you don't want to spend the time trying to find the best companies to invest in, if you don't want to keep up with their earnings calls, if you don't want to spend all the time doing the research on the companies, then instead of doing all that, you can just invest in an ETF that gives you exposure to the biggest 500 companies. The second place for you to potentially invest your money are into emerging markets. An emerging market is a country not in the United States that is developing. So these are some of your smaller countries or some of your more economically growing countries, and you have the opportunity to invest in these countries through the stock market. Again, you can invest in individual companies or you can invest in ETFs. If you are not willing to put in the time to research a company and then research a country and then research its currency, I don't recommend you going out and individually just investing in companies, because now you're taking on a whole lot more risk, because you're not just investing in a company in the United States now, you're investing in a company in a different country that operates on a different currency. So if you don't want to put in all that research, look for emerging market ETFs, because that will give you exposure to countries like China and India and Brazil and Korea and Vietnam. A couple examples of this are SCHE and VWO. These are ETFs that I'm invested in, and again, this is giving you exposure to now not just countries, but companies and countries and currencies outside of the United States. One thing that I want to caution here is you can expect a lot of volatility here, because we have this national and global debt crisis that the whole world is facing right now. It's causing countries to go into default. We recently saw Sri Lanka declare default on its debts, and we have about a dozen other countries, according to the World Bank, that could potentially default on their national debts because governments around the world had to create so much inflation to help fight this economic slowdown because of the pandemic and plus of other government spending operations that they had. And so because of all of that, you can expect a lot of volatility, a lot of uncertainty, and a lot of craziness, not just in our economy here, but in economies around the world, and even on bigger scales over there, because they're not as stable of economies as the United States. So that means you can expect a lot of craziness, but it does create some opportunity in the form of investment if you're willing to take on some of that risk, because there is going to be risk. Companies will go bust as some of these currencies go bankrupt, as some of the countries go bankrupt. And so these are the things that you have to pay attention to. So understand that there's a lot of risk, but it does come with a different type of upside, because now you're not just investing your money in the United States. It's a way for you to hedge also what's going on here in the United States, because you're also investing in different currencies and economies. The third place where you'll be able to find opportunity is in the crypto market. Now, you don't have to look very far to see the cryptocurrency has been hit very hard, and you've seen some of the not so good coins already get on the verge of being completely wiped out. And I don't think that is done yet. We're going to see more scams in cryptocurrency. We're going to see more coins get wiped out. We're going to see more coins go bust. And this is where, again, it can create opportunity when you're looking in the right places. If you believe in the cryptocurrency technology, if you believe in the blockchain technology, this can create an investing opportunity for you if you find a good fundamental investment. Now, of course, you have to believe in the investment. If you don't believe in cryptocurrency, don't just blindly throw your money in there. You have to first believe in it, and then you have to find the good assets. You don't want to just throw your money into meme coins because you hope that it's going to have a meteoric rise. This is where fundamentals matter, especially when things start to go down, because now smart money starts to come out and all the dumb money starts to go away. The saying is that when the tide starts to go out, that's when you see who has been swimming naked. Well, when times are good and money is plentiful, well, then people can make money with dumb money decisions. But when money starts to become tighter and you start to see some of the free money starting to go away, well, that's when the smart money really starts to come out, and this is where you want to find a good opportunity. So if you believe in crypto, you believe in the technology of blockchain and you want to look for good opportunities, well, this can create opportunity for you with everything else going on in the economy, the world, and the cryptocurrency market. But again, you have to be willing to withstand volatility. Fourth place where you can consider investing your money is in some physical gold. So I look at gold like real money, like hard money. I buy gold in a passive strategy where every month I buy a little bit more of gold. Again, just like with a lot of my other passive investments, I don't care what happens in the day-to-day price of gold, whether it goes up or down. I'm just buying a little bit more every single month as another place of saving hard money. Because if I had $50,000 worth of cash or $50,000 worth of gold today and I buried it in my backyard, in 10 years, which one's going to be worth more? Well, I think the gold is going to have more buying power in 10 years than the cash will, because our cash is losing value every single day. And as our cash loses value, the value of gold, or the price of gold relative to the cash, goes up. So as the value of the dollar goes down relative to gold, the price of gold goes up. So gold is more of a store of value. Our cash is a currency, a way to buy and sell things. I'm not a speculator, I'm an investor. And gold is more of an insurance than anything else. But the point that I want to really emphasize here is, if we continue going down an economic slowdown and the Fed changes course, where we are facing high inflation and then the Fed wants to fight the slowdown in the economy with cutting interest rates by stimulating the economy, that would create significantly more inflation. That would hurt the value of the dollar, and in theory that should also cause the price of gold relative to the dollar to go up. So just one thing to pay attention to, that gold is an alternative way for you to save your money as opposed to just storing cash. But it also does have its own risks because gold is volatile. However, it's an alternative and a way for you to save hard money. So if you have some extra cash sitting around and you want to find a way to save it in an alternative way, gold is one potential option for you. If you enjoyed this short clip from my longer videos, here's another clip that I think you'll love. And while you're at it, if you're interested in learning more about how to start generating passive income, our team put together an amazing guide that goes over what passive income is, how to start generating passive income, and different passive income strategies. These are things that you can start doing even if you don't have a lot of money. So if you want to read this free guide on how to start generating passive income for free, all you got to do is click that button right over there. Thank you for watching, and as always, keep hustling.